Asia markets are falling again today, set to clock declines at the end of the first week of this year. South Korea is leading declines today, and that's despite good data coming from the private sector in the US, which gained jobs for the fourth straight month to end 2023. It saw a big bump in leisure and hospitality hiring. That's two industries that were decimated during the pandemic. But markets are also on tenterhooks, awaiting the jobs report today. What investors essentially expect is a number not too robust that it would trigger more rate hikes, but also not too slow as to raise worries about the economy. Now, let's try and understand a bit more on this with Mike Ingram. He is Senior Market Strategist at Active Trades. Thank you for joining us. All right, Mike, in markets jargon, the quest at this point is for a Goldilocks number, right? Will investors be satisfied with this US jobs report, in your opinion?
Well, I'm not sure that investors are ever entirely happy with the state of affairs. And what tends to happen is once they get data which they think justifies a very bullish scenario, they immediately construct an even more bullish scenario, which needs even more supportive data. And we saw that towards the end of last year, where the Federal Reserve spent months pushing against market expectations of some fairly rapid rate cuts in 2024. And then as soon as the Fed, to some extent, pivoted, I would say capitulated almost in December, and moved towards a position more consistent with what the market was already pricing in, the market then leapt ahead and priced even more rate cuts. And that's something we're kind of backing away from again now. But as you say, growth is the other side of the equation, and it's a fine line to tread between growth, which is so strong to actually derail the rate cutting narrative, or on the other side, growth which isn't coming through strongly enough. And, if you look at the pricing of equities, there's a lot of growth actually still priced into the market right now.
And that's interesting because equities are off to a bumpy start of the year, as we saw. But what are the predictions for the rest of the year, Mike? I wonder, because with banks cutting rates, that should fuel a good performance on the equities front. Is that correct?
Well, I think it's going to be challenging because there's still quite a big gap between market expectations on rates and what the Fed is currently saying, even having taken a more dovish line at the end of last year. So if you look at where we are right now, the market is expecting 5 to 6 quarter point cuts during the course of 2024. The Fed at the moment is saying 3. Also, if you look at the flip side, if you look at growth and earnings generated by companies, the market is expecting profit margins at companies to stay very, very solid despite a softening economy. So I'm not sure that's entirely consistent, because if companies have pricing power, why are you expecting inflation to come down very quickly? Not everybody has the same sort of pricing power as Amazon Prime, for instance. So yeah, there's a lot of there's some internal contradictions, I would suggest, and a very narrow path to success. And of course, the bar has been raised because we did have a big market rally at the end of last year. So your starting point is actually already quite challenging.
Very, very interesting. Mike Ingram, thank you very much. And now let's go to the top stories from around the world. Ford reports a 7.1% rise in US new vehicle sales for 2023, reaching nearly 2 million units. Despite being the automaker's best year since 2020, it lags behind the industry's overall growth. Ford's F-Series maintains its reign as America's best-selling vehicle, and also electric vehicle sales show promising gains, contributing to a solid performance amidst challenges like labor strikes and supply issues. McDonald's is experiencing a meaningful business impact in the Middle East, becoming the target of boycotts due to Israel's war in Gaza. Middle East McDonald's restaurants generate about 10% of the company's revenue. The franchise says their restaurants are operated by local owners. McDonald's Israel has said on its social media accounts they had given free meals to Israel Defense Forces personnel. And Carrefour will stop selling several PepsiCo products in 4 European countries to protest what it called unacceptable price hikes. Stores in France, Italy, Spain and Belgium started displaying notes alongside items such as fizzy drinks, Lipton teas, Lay's and Doritos crisps, saying they no longer stock the brands. The decision comes as retailers across Europe face ongoing pressure to hold down prices.